Hi, this is Vijay Bambani, and I'm here to talk about a very contextual topic about interest rate cuts. Before I proceed further, let me remind you we are now on Telegram. The official handle is Equity Master Official. Please join me on Telegram, wherein I and the other editors put in their views and news 24/7. Now to come back to the topic of the interest rate cuts. Recently, the United States Federal Reserve surprised people by announcing an interest rate cut. The market wasn't really expecting it, but took it in its stride. Do interest rate cuts really help? I draw my experience from what I have seen in the past. It was 2014, if my memory serves me right, October or November maybe, when I was in a studio doing my television show on commodities, when the Chinese announced an interest rate cut. There was a big hue and cry, and it was a period when all the countries were basically either officially or through backdoor means effecting some amount of stimulus or pump priming their economies. And the Chinese, remember, consume 20% of industrial metals in the world. So when they cut interest rates, it was expected that the markets would actually jump, which they did. Now, when I was asked to provide my opinion of it, it was actually a Hobson's choice. Interest rate cuts were supposed to help prices of commodities and equities. But remember, from 2009 onwards, the world was living on stimulus, interest rate cuts, quantitative easing, bonds, etc., etc. Remember, there is something called the law of diminishing returns or the law of marginal returns. If you keep doing the same thing, the incremental benefit keeps reducing progressively. And I went on air saying that I think the rally in commodity prices would be short-lived, maybe 2 to 4 trading sessions at best. Guess what? The rally lasted a full 4.5 hours. Prices rose for 4.5 hours only to decline sharply. It must be remembered that basic school classroom economics tells us that there are 4 factors to production. The cost of finance is only one of them. So if you were to stimulate the economy by way of an interest rate cut, it is not going to be a major enough stimulus to basically force people to come out there to shopping malls and start buying, or go to car showrooms and start booking automobiles, or to step up their export orders. It is at best a sentimental booster for the near term. So who's joined the interest rate cut bandwagon? Now this is a revelation. US, of course, the largest financial market in the world. Closer to home, it was the Malaysians that effected an interest rate cut. South Africa, a gigantic nation which is facing distress, and let's not forget the top 10 exporters of gold. Their economy is under distress. They are cutting rates. The world's one of the more significant commodity exporters, Australia, cut interest rates. The Chinese have cut interest rates as soon as the Indian Monetary Policy Committee of the RBI cut interest rates. They have been followed by the Russians in the past. So we are now in a bandwagon where interest rates are going lower. I don't think that these interest rate cuts will stimulate commodity or equity prices for far too long. You have to remember that there are 3 other factors of production which also have to basically start showing signs of improvement before the interest rate cut alone starts to yield their returns. Think of it as a 747. A 747 has 4 engines, just like the 4 factors of production. If 3 engines were to go out, the 747 can still stay up above the ground, but it can't really fly as smoothly as it is supposed to. So it's only 1 engine out of 4 that is getting stimulated, not all 4 engines. I would reserve my doubts for the beneficiary impact of interest rate cuts. You will see commodity prices basically stabilizing somewhere around here, and my bet is that at least the industrial commodities would slowly start to fall all over again once the interest rate cut impact basically starts to wear off. Remember the law of diminishing return. If you keep cutting interest rates, the incremental benefit will keep reducing progressively. The markets get used to anything, good news or bad news. So if you keep giving it the same kind of good news, it takes it in its stride. It's nothing new for it. And therefore, the interest rate cut will largely go unnoticed, at least for the hard assets markets. Is there a trading plan here? I think so. I think if you see significant rallies in commodity prices, especially industrial commodities, not bullion, not gold or silver, definitely. I'm talking of base metals, I'm talking of energy. If you do see significant rallies out there in these asset classes, I think it would be another opportunity for those people who missed out on the short selling bus to go out there and they would get an opportunity to initiate shorts afresh. So the interest rate cuts have come, and they will go as quietly as they have come. The US market itself did not react too long positively to the interest rate cut. And the US market basically is the world's largest market. Hey, if you cannot really enthuse that with an interest rate cut, who else will you enthuse? And remember, the Latin American countries, most of which are very major exporters and producers of natural resources. Let's talk about Argentina, let's talk about Mexico, let's talk about Ecuador, let's talk about Puerto Rico, let's talk about Brazil, Venezuela. They are all in deep distress. They will basically have no other option but to dump whatever they can in the export market, and what they have to sell is natural resources. So I don't see any great rally occurring here in the absolute near term. You will need the other three engines to basically stimulate the market. I would say let go of the interest rate. Don't pin your hopes to it. Harsh words, but a realistic look at the market. This is Vijay Bambani signing off for now, not before reminding you to like my video, share it with your family and friends, and in the comment section, do let me know what you think about this video and what other videos you would want me to record for you in the future. Do take very good care of yourself. Thank you. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.